this summer, we had a big rotation, with money fleeing from the high-flying growth stocks and only neglected staple names, especially the defensive consumer packaged goods plays. They call them CPGs. But there was one stock that got left behind. That stock was Clorox. Yep, after lagging the averages for most of the year, Clorox has spent the last few months rolling over to the point where this serial outperformer is now in the red for the year. I'm not used to seeing that. Are you? You know I've been a big believer in this company. I think it's got a great house of brands, terrific management. It's led by CEO Ben Odor, been on the show many times. So when Clorox held its analyst meeting earlier this week, I hope they tell a better story, something that would give people a reason to buy the stock again. Long story short, that is not what happened. The analyst meeting wasn't a positive catalyst at all. It was a negative one. Clorox actually cut their sales and earnings forecast for the current fiscal year. I think the stock would have gotten hit a lot harder if it hadn't already pulled back hard going into the event. But it still slipped $2 on Wednesday before falling another $3 yesterday after the analysts who follow this thing cut their estimates en masse. But today the stock caught fire, erasing yesterday's decline and then some. And you know what? I think it's not done going higher. Yep, in spite of that unexpectedly downbeat analyst day, I think this is the time to start buying Clorox, although I wouldn't buy it all at once. Why should you even consider buying the stock of a company just guided down? Because to me, that bearish update feels like what I call a kitchen sink event, a cleansing moment where management resets, that's the Wall Street term, resets expectations by getting all the potential negatives out in front of you. If this market stays volatile, Clorox could be exactly the kind of stock that works. First, though, let's go over these negatives because they're in control right now and because there's actually good reasons why the stock's been a stinker. The last couple of quarters were less than stellar. In May, Clorox reported a slight top and bottom line miss and modestly cut their full-year forecast, blaming promotional activity in wipes, along with weakness in bags and wraps. A lot of competition here in this market, okay? At the beginning of August, they gave you a messy quarter with genuinely disappointing guidance, including lower-than-expected forecasts for organic revenue growth and earnings per share. Once again, they struggled in certain categories, and this time management suggested that the second half of 2019 would continue to be rough. While Clorox told you they believe in their strategy, investing in the brands to maintain market share and pricing power, they also told you not to expect any pickup in sales until next year. Which brings us to Wednesday, when the analyst meeting rolled around and Clorox threw the kitchen sink at you, wiped, I hope, by some of these great products. The company meaningfully cut their forecast for 2020 fiscal year, a forecast that they just issued 2 months ago. Suboptimal. Rather than flat to 2% sales growth, they're talking about a low single-digit decline to up 1%. That's really not great. Although none of that weakness is organic. They left their organic growth forecast unchanged, and that's what people really look at in this business. Clorox also lowered its gross margin guidance instead of flat to down slightly. They're saying it's going to be down slightly. They also took their earnings forecast. The old midpoint was $6.40. Now it's $6.15, down appreciably. So how the heck can I look at this and tell you it's time to buy the stock? I mean, have I lost my mind here? No, I think I've just done homework. First of all, you need to understand that Clorox has now reset expectations. I think the numbers are now low enough that they can be beaten. Maybe it's even classic UPOD, under promise and over deliver. We've seen this pattern before. You know, in January, McCormick cut their forecast, stock got trounced, then turned out to be a fabulous buying opportunity. Since then, McCormick's raised its guidance twice. Stock has caught fire. Nobody even remembers that they disappointed 9 months ago. Apple did the same thing. Remember when they issued that putrid guidance right at the beginning of the year? Well, I mean, that stock's gone from 142 to 225, one of the best performers out there. I think Clorox has an opportunity to do the exact same thing here, but that's not all. See, we also got some good news from the analyst day that I think no one noticed because everyone was laser focused on the number cuts. For example, the company rolled out a new long-term strategy with new long-term forecasts. They're talking about 2 to 4% net sales growth, 25 to 50 basis points of operating margin expansion, and copious free cash flow generation. The issue here is that most analysts just don't believe Clorox can do it. They don't think it can hit the targets. They're really doubting. But I like the sound of the new plan. They want to invest heavily in the brands and innovation to differentiate their products from all that private label competition out there. That makes sense to me. If Clorox can actually deliver on these goals, the stock deserves to go much higher. That strategy makes a lot of sense to me, even if Clorox doesn't seem to be seeing a lot of benefit from it at the moment. More importantly, Doers seems to have a very good handle on what's been going wrong in the company's most troubled categories, like Glad bags. The problem? Clorox raised prices last year when everybody was worried about rising raw costs. Then raw costs came back down. Most of the competitors left prices unchanged. In response, retailers have been punishing Clorox by giving them fewer points of distribution. That's the problem. And Doris says he's working with those retailers to get that distribution back. I think he's going to succeed at that. Oh, and the company also mentioned that they're rolling out a line of Burt's Bees personal care. I really, really like this. Where's my Burt's Bees stuff? Just a second. I, of course, don't have any Burt's Bees stuff. That's my bad. And that's going to be, the Burt's Bees will be, actually, I have some in my bag. Not this kind, though. It's going to be infused with cannabidiol, or CBD. And I think it will be a big hit because it will be the first truly national trusted brand to offer cannabis-infused balms and salves. And that's huge. I mean, right now, Lord Jones is the big brand. Most people don't know Lord Jones, but who doesn't know Burt's Bees after all the money that Clorox put behind it? Finally, it's worth pointing out that Clorox has been through this before. In 2016, the stock got hammered based on worries that the environment was too promotional and the private label competition too fierce. The stock bottomed at 110 on November 10th of 2016. 5 months later, it's 138. We saw the same darn thing at the beginning of the last year, too. The stock plunged to 113 in April of 2018. Everyone fretted Clorox was a broken stock. Boom, 167. Bottom line, when I see this kind of pullback in Clorox, I don't think sell. I think buy, although there might be more downside before it bottoms. But Ben Odor is an excellent CEO who's more than proven himself, which is why I'm willing to stick my neck out and recommend putting a small position of cannabidiol on putting some Clorox in your portfolio, and then I think, you know what, buy more if it pulls back, because look what's coming. Cannabis under Burt's Bees name. You tell me that won't be the bomb, B-A-L-M-B-O-M-B. And hey, you know what? They're paying you to wait with a 2.8% yield. Let's go to Dan in Illinois. Dan!
Booyah, Wizard of Wall Street. First time, long time from the cornfields of Illinois.
Thank you.
Well, I'm in the house of pain with Ollie's Bargain Outlet.
Yeah.
Can you give me a reason why I not have my own closeout sale on Ollie's?
You know what? I'm going to have to tell you to stick with Ollie's. I mean, Ollie's really did bomb. It did not deliver the right number. I do like, remember, I like either off-price or online. I think Ollie's can come back. Channel Trust, though, likes Burlington much more. And what we really like is the fact that we found some Burt's Bees. And it's the bomb. I always say better late than never, frankly. Looking for a beauty and the bleach? Look no further than Clorox. Kids at home, do not drink this. I think you're getting a buying opportunity here. Much more Mad Money. With 10-year Treasury slumping, you might be wondering if it's time to invest in REITs. I'm eyeing potential plays that are still available in the space because it's been fantastic. Then stocks soared after today's jobs report, but tonight I'm offering up a list of plays that could be too cheap to ignore even after the roar. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Take control of your financial future with the new madmoney.cnbc.com. Cramer's exclusive CEO interviews, full episodes, analysis, even your own soundboard. Plus special access to Mad Money 101 with rules and techniques to break down the market for all investors.
The red flag that makes me drop a stock immediately is...
It's everything you need right when you need it. The new madmoney.cnbc.com. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.